The retirement plan for SWAPA pilots can sometimes be confusing. IRS limits and plan documents dictate some of that complexity. This video blog will walk you through each area of what we refer to as the retirement schematic or pipe diagram. You can get a digital copy by clicking the link below or by visiting the SWAPA website and looking for it on the 401k committee page. Also, links to access each of these accounts mentioned throughout the video are available at the bottom of the SWAPA website. Let's begin. The company non-elective contribution, or NEC, is 15% of eligible wages. Eligible wages include everything you'd normally associate as your pay, including trips flown, training, sick and OJI leave, and premium and JA pay. Eligible wages do not include disability payments or per diem. This money is contributed to your SWAPA 401k account held at Schwab every regular pay period. The company's profit-sharing contribution is based on the annual profit-sharing rate. Traditionally, annual profit sharing is announced at the first Southwest rally of the year, which is usually February. It's a function of the company's adjusted net profits divided by the number of eligible employees. The 2018 profit-sharing rate of 10.8% was announced on February 12, 2019, and funded March 15, 2019. The company has chosen Empower as the custodian for this account. This valve shows how qualified NEC money gets shut off once you hit the IRS 401A-17 2019 limit on eligible compensation, which is $280,000. Only NEC money on earnings up to this limit can go into your 401k because it's a qualified retirement plan. This valve is identical to the one on the left and serves the same purpose of shutting off qualified profit-sharing money on earnings over and above $280,000. Like the NEC, profit-sharing on income above this limit can't go into the profit-sharing plan because it's a qualified account like our 401k. This green box represents your payroll deduction. You elect a percentage of wages to contribute and choose Roth, which means after-tax dollars, or traditional, meaning pre-tax dollars, via the Schwab website. Your contributions are limited by the IRS 402G 2019 elective deferral limit of $19,000. Once you hit that amount, your personal contributions are shut off. Qualified money from you, the company NEC, and profit sharing all count towards the IRS 415C 2019 contribution limit of $56,000. This main tank is filled first come, first served, meaning one source can be crowded out by other sources. It's important to remember this, especially if you want to contribute to a Roth 401k, because only pilot contributions can be after-tax and eligible for Roth, while all company contributions are pre-tax monies, which means they can't be. If you want to max out your Roth, you have to make sure you elect a large enough pilot contribution percentage so that your money gets into the tank before it's full of company NEC money. Once this tank is full, any qualified money coming in spills over as non-qualified excess money. We'll get to that in a minute. But first, back to pilot contributions. If you're at least 50, or will be by the end of the year, the IRS allows you to make catch-up contributions to your 401k. This is known as the IRS 414V catch-up limit, and it's $6,000 in 2019. Picture these catch-up contributions going into a qualified auxiliary tank. That money doesn't count against the 415C limit, so older guys can save up to a total of $62,000 in qualified plan contributions in 2019. Here's the catch. Any catch-up money has to come from you, not the company. So that's the end of qualified retirement savings. If you want to get some additional tax-deferred savings, you have access to 3 other non-qualified plans. We'll go over 2 of those now. The third, Top Hat, is beyond the scope of this video. Remember that income over $280,000 isn't eligible for qualified NEC or profit sharing, but we're still entitled to that money. Each year during the fall enrollment period, we choose whether we want to get those extra dollars as taxable cash or if we want it to go into the non-qualified 401(a)(17) plan during the next year. Contributions to this plan are deposited into a rabbi trust held by the company. The rabbi trust has some protections for us, but our money could still be taken by creditors if the company were to declare bankruptcy or suffer insolvency. So, if you're worried about Southwest facing something like that before you retire, enrolling in our non-qual plans probably isn't a good idea for you. This plan, along with the other two non-qualified plans, is accessible via the Empower website. If you make the election to defer into this plan, the election is for both your NEC and profit sharing. Non-qualified spillover money from the qualified tank is either paid as taxable cash or deposited into your non-qualified 415 excess benefit plan. Like the 401(a)(17) plan, you make this election during the fall enrollment period the year before. The 415 excess benefit plan is identical to the 401(a)(17) plan in structure and protections, same rabbi trust, same investment options. The only difference between the two plans is where the non-qualified contributions come from. This plan is funded by money that spills over the 415C contribution limit of $56,000, while the 401(a)(17) plan comes from contributions from wages above the 401(a)(17) income limit of $280,000. One last thing to cover. Our CBA lets us choose a set profit sharing deferral percentage, 5%, 7.5%, 10%, or full, that will be directed to the profit sharing plan. Many of us want to make our own individual choice, but the IRS won't let us the way the plan is structured today. So the membership votes during each fall election, and the most popular choice applies to all of us. It's a topic SWAPA educates on every August, so look for more information then. Since profit sharing funds after the end of the calendar year, profit sharing is normally the last money to flow into the qualified tank. Remember that 2018 profit sharing was paid March 2019. If the tank is full of company NEC and/or pilot contributions at that time, profit sharing spills over and is immediately paid in cash if you opted for cash. Hopefully this video has given you a better idea of how our plans work together. If you have any additional questions, call SWAPA. And if you have any input for Contract 2020, email us at contract2020@swapa.org. Thanks for watching.